Trading hour, it's 11 o'clock and we are here with the latest from the street, and it's not looking like a good morning once again. There's follow through and there's follow through on the way down. The market has been consistently below the 11,000 mark, and that's the screen that we're looking at today. Good morning, Prashant.
Surabhi, hi, good morning. So 81 lower, and the market breadth, look at that, 2:1 in favor of declines. So it's pretty poor across the board as we see it. Markets and trading ideas, corporate sort of information will be the focus through the next 60 minutes or so, and some of it is actually starting to come through even as we start. So board of CG Power to remove Gautam Thapar as chairman with immediate effect. So this is information which is coming in. I'm assuming that this should be a release to the exchanges. Yesterday there was a conference call, and I think this question was asked to the management, who was on the call sort of addressing these points, and I think at that point, there wasn't any specific comment made on this particular issue, the promoters issue, whether he will remain as chairman or not. On the call, at least yesterday, much of the focus was about the company's plans to revive, their plans to revive the business, etc. But this has been speculated for a while. Newspapers have sort of carried it. Our colleague Nisha reported on this a couple of days ago that this was under active consideration from large shareholders. So that is what is coming through. Board to remove Gautam Thapar as chairman with immediate effect. The stock is not budged a bit. It's up 4 points. It was up 4.7. It's up 4.7 now.
It's been moving circuit to circuit, Prashant. It's moving to a different beat altogether. This, of course, is something that a lot of people had asked, because the erstwhile promoters really hold nothing in the company anymore. It's all gone to the lenders and to the banks. So perhaps this was something that was being asked of. Anyway, that's CG Power. Before we get you more on the markets, there is an interesting story that we have lined up for you. So let's straight away get to it. RBI's dividend payout to the government this year is double than what it was in the average of the last 5 years. Now, this spike is because of an important accounting change by the Reserve Bank. The central bank is accounting for forex gains differently. Lata is here to explain this to us. Lata?
Okay, thanks a lot for that, Surabhi. First, let's look at the increase in dividend. Okay, before we get to the reasons, just pull up the bar chart and it'll give you an idea of how over the last 5 years, the average has been about 60,000 crores in 2016. It was 65,000 crores. That was the highest ever at that time. And now the highest ever is absolutely double of the last 5 years, even a little more than that. Now, why is that? That is the reason that we have been able to unearth, entirely because of sources close to the Reserve Bank. The Reserve Bank may have made a gain of at least 21,000 crore only on account of how it accounts for FX. Now, what RBI used to do up until the previous year, that is 2018, is that every week it used to revalue all its FX reserves and mark them to market. They wouldn't keep it at the price at which they bought, but they would mark it to the previous week's price. And then if they sold this week, the difference between the two would be marginal. So no gain would accrue whenever they sold dollars, because the acquisition cost was always last week's last mark-to-market price. Now they have changed that, and they have taken the weighted average historical cost of acquiring the dollar. So if they sold the dollar today, it would be, you would minus the purchase cost, which would be a historical cost. And therefore, in the current year, they have been able to book a lot of FX gain, which they have passed on. About 20,000 crore of that 1.2 lakh crore appears to have come only from this accounting change. Now, let me explain this just with the arithmetic. Let us take, for example, earlier, FX was marked to market every week. So if this week RBI sold dollars at what? 71 rupees, say this week. Last week, the mark to market price was, say, 70. All the dollars, $400 billion was marked to market at 70. So if acquisition price is 70, you're selling it at 71. The gain that RBI booked in its P&L was 1 rupee. What is it doing now? It is taking the average cost of the purchase price. So the average price they must have bought at 50, 51, 52, 55, 60, 65. So let us assume the average acquisition price was 55 rupees. This year, today, if they sell at 71, it becomes 71 minus 55. And therefore, it's a gain of 16 rupees. Now, a lot of people we spoke to, even ex-RBI guys who showed us this accounting change, said that RBI's earlier way of accounting was extremely conservative. And this is probably, the right way to account for it, because this is the purchase price for the central bank, and therefore subtracting it from the sale price is the way it should be accounted for. The only sore point about all this is one government is getting the advantage of this, something which could have accrued to the previous government, to the previous ones. It's just becoming one government's manna from heaven. So this clearly appears to be one big reason why the dividend has jumped. Now, we also learned that that was very obvious to all. Even Rakesh Mohan mentioned that when he was on our interview. The large amount, 3 lakh crore of bonds that they bought has yielded a much higher dividend. But it appears that there may be an accounting change even that. Because 3 lakh crore, the average interest on that would be about 6.5%, 7%. That's where the 10-year is trading at this point in time. So give or take all the bonds, even if you took some old bonds, it may be 7% at the most. It appears that they've made some 36,000 crores by way of gain on interest. So perhaps even over there, is there a mark-to-market on the way the bond is accounted? We do not know that. But these are just sources speculating. Maybe the accounting changes not only in the FX, it's also in bonds. We don't know. But definitely in FX, this is a manna from heaven for the new government. And that gain will be there even in the coming years, maybe a little less than this year. But in the current year also, if you're selling dollars at 71, 72, the historical cost may not be 55. It may start averaging higher to perhaps an average acquisition cost of 60 or 65. But still, it looks like a good dividend from RBI is possible even next year and the year after. Well, just to put some thoughts on this, Dr. Pranab Sen joins us now. Dr. Sen, if you heard the accounting change, what's your comment on this?
Well, up to a point it makes sense. But what puzzles me is that the Jalan Committee has endorsed this accounting change, which is proposed by the Maligram Committee. Now, the reason it's puzzling is because this 20,000, the only place it can come out from is actually the revaluation reserves.
Yes.
It cannot come from anywhere else. Now, so you have the Jalan Committee saying, one, revaluation reserve should not be touched. Accepting this accounting change means that the revaluation reserves will be touched, and every time the RBI sells dollars, it's going to lead to a further reduction in the revaluation reserve, both in terms of the dollar holdings as well as in terms of the dividends paid out. So, we are looking at a situation where there could be a secular decline in the revaluation reserves over time.
Yes, but
now,
will it be? It be? Will the gains not come down over time? If it is an accounting change, usually it is very high in the first year, or it is high only in 1 year.
No. Everything depends on how RBI is financing the monetization. You see, this year the RBI financed it by buying government bonds and selling FX. So the net was the monetary expansion, right?
Yes.
But by and large, in the last, if you look at the last few years, it's been mainly purchases of foreign exchange. Now, if RBI next year reverts to that, right, this gain vanishes.
Yeah, then there's no gain, yes.
Then there's no gain at all. It's only when the RBI sells foreign exchange. Now, the question that then arises is, will there be discussion between the government and the RBI saying that, look, please monetize, if you're monetizing, let's say, 100 rupees and you're doing it all through FX purchases, now, would you do like 120 rupee government bond purchase and $20 you sell foreign exchange?
Okay.
Quite possible.
No, actually now probably that FX sale that they did was also as a result of this accounting change. There was an FX sale, FX swap.
Yeah. No, it was not because of the accounting change.
Okay, that's not affected. Okay.
Yeah.
But Dr. Sen, a central bank will not start selling dollars just because it wants to oblige a government. it would, I mean, it is a market player, and they will normally do it only when the rupee is way out of whack with the REER. I don't think the RBI would be so irresponsible.
Lata, in any case, today we are talking about 15% overvaluation of the rupee. Every government is going to say, sell dollars.
Okay. Okay. No, I would think, I would assume that even the government will be worried if the RBI is perceived as in favor of depreciation at a time when perhaps there is a market fall or something. This can be a very dangerous impression to give. Do you really think they would become that reckless?
Look, one hopes not.
Okay.
But then, as we found out in the past, that's only an assumption.
Oh, yes, of course. Honesty and integrity are assumptions, so I agree with you. Thank you very much, Dr. Sen, for joining us and giving us your perspective. Yes, it's possible that for the government will start perceiving, especially a government that's running a huge fiscal deficit and whose tax reserves are not rising, would want the Reserve Bank to give them more money. But I don't know, if you fear that they will tell the RBI, please sell a few dollars because you can book a large gain, then, I mean, it is dangerous. But I'm hoping that on all sides, integrity and good sense will prevail.
Okay, all right. So let's see. Those are the nitty-gritties as far as some of the accounting changes at the central bank are concerned, which perhaps would have led to that massive payout to the government of India. We need to take a very quick break on that note. On the other side, we'll get back to the market and get you a couple of trading ideas. Also, a fundamental call coming up with Gurmeet Chadha, co-founder and CEO of Complete Circle Consultants.
इसे कहते हैं सेविंग्स।
अच्छा और इसे
Comfy, 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 comfy.
MRF ZLX. Comfort made more comfortable.
Hetic fittings make your furniture work beautifully. German quality you can trust.
जिनके हर कदम में है स्वैग Khadims, in step with every Indian.
Okay, welcome back. You with us here on Trading Hours. 75 points lower on the Nifty. 10,970 is where we are at. Rajat Bose is with us with a quick check on things on the market and some ideas for trades. Rajat, thanks very much. Good morning. What are your thoughts? What would you want to do right now?
Good morning, Prashant. What I would personally like to do is that, especially as far as the indices are concerned, if I get higher levels, I would like to sell, because I'm not believing that we have actually made a bottom, and from here a sustainable rally is likely. The precise reason behind that is that this 12,000 plus levels to about 10,637, this whole fall, if you see 38% Fibonacci retracement levels are close to about 11,200, and 11,350 is the level where the 50% mark is. Coming to talk about that, we see that this range also encapsulates the two exponential moving, 200-day moving averages, both simple and exponential. So unless you see the indices taking out these range, especially the Nifty, I don't think you will expect a sustainable rally. And as such, these rallies, I have checked a number of stocks in the Nifty and the Junior Nifty, the Nifty Next. What I have found is that either they have retraced by 25% of the total fall, or they have retraced about 38%. So this is just a corrective pullback rally in a downswing. So my senses are that we would seek lower levels than 10,637, and this is not the final bottom, which I am expecting somewhere in October, prior to about say say 9th of November. That is the cycle date that I have, that around that time we would see the final bottom. So I would prefer to sell, but for intraday, definitely I have a buy call on Dower and with a very close stop loss of 433, and I'm expecting if it crosses 439, then the next target would be 442. And I would be selling bank stocks, and this time the third bank stock I'm selling since morning, that is State Bank of India. I would put a stop loss above 286, 278 and 276 are the two targets that I have for State Bank, and I am of the firm view that at higher levels this market should be sold.
Okay, buy Dabur and sell State Bank of India, and the broader advice from Rajat is that sell the moves, sell the rallies, and at high levels, I mean, you should be a seller. I mean, the trade is working out for now. 10,970 is what we have on the Nifty at this point in time. Let's put up RBL Bank. I saw RBL coming up at the bottom of the screen. It's some 7% off the lows, so it's seen a big recovery. Has it? 313 or so. I mean, it's only turning into the green right now, okay, I think it's 7% of the highs. That is today's trade chart, 314. Yeah. So after the steep sell-off yesterday, it did see a rally early on, and from there on, it's given up all those gains and is trading absolutely flat. We'll come back to RBL in some detailed way in just a bit, but my colleague Nisha is joining in with two pieces of information. One, of course, the news that she broke on Amara Raja, and the other one is the release to exchanges on CG Power that the board is basically taking the decision that Mr. Thapar must go and not remain as chairman of the company. Nisha, over to you. Morning.
Good morning, Prashant. So yes, a big development there in terms of corporate governance standards of the country. The buck really stops at the board, and that's the kind of power that the board of CG Power has also shown. In fact, they have removed Gautam Thapar, the promoter of the company, now holding only about 8,500 shares in the company, but still was holding the chairman's position on the board of CG Power. So he has been removed unanimously by a majority by the board of directors of CG Power. Now remember that he's a chairman and the director on the board. So he will still continue to be a director on the board of CG Power and will be participating in the affairs of the company. The board of directors have also said that the decision has been taken in the interest of the company and its stakeholders in discharge of the fiduciary responsibility of the board. So really the buck stops at the board. They have to take into account the interest of the stakeholders, and several investors and lenders had demanded the ouster of Gautam Thapar. And this is in cognizance of the current situation being faced by the company, where they unearthed the related transactions with other Avanza Group companies, which were erroneous and wrong in nature and maybe fraudulent. So that is the decision that has been taken. Yes, sir.
Okay, so Nisha, that is CG Power. That's news that we've taken on board. The other one, which is fresh and actually perhaps even more interesting, we should pull up the Amara Raja stock, which is right now struggling. Let's get the intraday up for you. It's down almost 5%. Now, Nisha is picking up from sources that there could be some trouble with respect to Brookfield's investment in Amara Raja. Nisha, do explain this to us.
That's right. So Brookfield, by way of its larger global transaction with Johnson Controls, had made the investment of 24% stake in Amara Raja. This is by way of the larger global transaction and not a direct exposure that they had sought by way of investment. So now, after the transaction is behind them, they are reconsidering their investment in Amara Raja and also may explore a sale opportunity. In fact, that is what sources have been telling us, and this has also been in continuation of what Brookfield has already stated in its SEC filing, where they have said that we are actively evaluating our involvement with Amara Raja and assessing how best to position Clarios' future participation in the Indian market. The question and the uncertainty on the technological ability of Amara Raja batteries after it has split from its long-term technology partner, Johnson Controls, that is the prime reason why Brookfield is also re-evaluating this investment. And therefore, the stock is down because the investors who have been uncertain about Amara Raja's future ability to be competitive as far as technology bandwidth is concerned, that is now really making the markets also jittery, because Brookfield as an investor is nervous about this particular investment, is what we are gathering. So that's a very, very important data to look at. But whether or not another strategic would come in and buy, whether Brookfield will be looking to sell this company, needs to be seen, because currently an evaluation is underway.
Okay, Nisha, thanks very much. And thank you for bringing us up to speed on those two companies, CG Power and what's happening with Amara Raja. That's the story which Nisha broke earlier. 4.5 lower on Amara Raja. 74 points lower on the Nifty. So things are still there and not taking a fresh leg down. We'll take another quick break.